In 2026, the average stock holding period is measured in seconds. Multi-million-dollar algorithms hunt the impatient across flashing red and green screens. Wall Street panics through crash after crash. And somewhere in America's heartland, a quiet farmer built a multi-million-dollar empire with a radical strategy, doing absolutely nothing. Meet Arthur. In 1956, he bought his first shares of stock. He never checked a ticker app. He never panicked during a recession. He treated equities exactly like his soil. Today we look at the math, the mindset, and the staggering final valuation of the ultimate buy-and-hold portfolio. Arthur did not hunt 10-bagger tech stocks. He looked for companies that mirrored his farm, businesses that produced essential goods, paid consistent dividends, and had deep roots. Early Coca-Cola, Procter & Gamble, rail and energy infrastructure, companies that fed, cleaned, and powered a growing nation. His philosophy was simple. When you plant a seed, you don't dig it up every 3 weeks to see how the roots are doing. If you do, you kill it. You water it. You wait. And you let the earth do the heavy lifting. From crop sales, he set aside a modest stake, a few $1,000s into 3 to 5 bedrock American companies. Not a lottery ticket, a seedbed. Then came the storms. The 1973 oil crisis, Black Monday in 1987, the dot-com crash in 2000, the Great Recession in 2008, the pandemic in 2020. Neighbors sold land. Investors liquidated retirement accounts. Arthur kept farming, and he kept holding. His secret weapon was not genius timing. It was a dividend reinvestment plan, DRIP. Every dividend automatically bought more fractional shares. During crashes, those dividends bought more shares at a discount. He was not losing money. He was acquiring discounted acres of the stock market. Put a modern-day trader on the left, 6 monitors, caffeine, and anxiety. Put Arthur on the right, a tractor, soil under his nails, and time. Over 15 years, more than 90% of active day traders underperformed the market index. Trading fees, short-term capital gains taxes, and psychological stress grind them down. Arthur paid almost nothing in tax drag on those holdings for 70 years because he never sold. Holding period, microseconds versus 25,550 days. Primary driver, momentum and anxiety versus compound interest and time. So what did the seed become? Start with $5,000 in 1956. Assume a blended long-run return near 10% a year with dividends reinvested. The historical American equity story, not a fantasy ticker. After 70 years, that quiet snowball can grow past $5 million. The exact number depends on which bedrock companies he held, but the shape of the curve is not a mystery. It is math. It is patience. It is soil left alone. And the climax is not a sports car. Arthur still drives the same truck. The wealth sits in a trust for his grandchildren's education and to preserve the family farmland for the next century. 3 generations at one dinner table. That is the harvest. You don't need a faster computer or a complex trading strategy. You just need to find good soil, plant your seeds, and have the courage to leave them alone. What seed are you planting today?